You're watching the latest financial news with VEVOFX. It's Thursday, the 21st of September 2023. The state of the global economy has never been more problematic than it is now. Topics about the global economy will headline several addresses by heads of state at the United Nations General Assembly. Moreover, several decisions will be made by central banks this coming week, which may have a volatile impact on several major currencies: the dollar, pound, euro and yen. The abundance of upcoming central bank meetings by the Fed, the Bank of England and Bank of Japan regarding interest rate announcements this week is undoubtedly raising eyebrows. So, how will all this affect the dollar? Well, keep watching to find out. The United States dollar index, the DXY, which tracks the greenback against six major rivals, fell 0.1% to 105.15, not far from last week's high of 105.43. The index has now gone up for 9 consecutive weeks, the longest such run in almost a decade. Janet Yellen, the US Treasury Secretary, said on Monday that she has seen no indications that the US economy is about to undergo a downturn. Despite the dollar's bullish momentum, which has been powered by robust US growth, the currency's strength is set to be put to the test by a slew of data and the Fed's interest rate decision coming up on Wednesday. And home builders' optimism in the United States hit a new low in September, according to data released on Monday, as high interest rates made purchasing a home less affordable for potential buyers. Several forex market analysts like Michael Brown believe the Fed should hold off on raising interest rates. Brown added he does not anticipate too much of a significant shift in terms of the statement. While the current assessment suggests a somewhat dovish bias in terms of the projected interest rate policies, it is worth noting that this should not substantially undermine the prevailing bullish trend of the dollar over the long term, especially considering the forex market's apparent emphasis on relative growth dynamics. So in this regard, the United States continues to outperform the other G10 economies, although in a challenging global landscape. Indicators in the market imply that investors expect the Federal Reserve to keep interest rates unchanged between 5.25% and 5.5%. That's coming up on Wednesday. Up 0.23% against the dollar, the euro is now at $1.0683. Specifically, the European Central Bank, the ECB, raised interest rates to 4% not that long ago, while suggesting that they may be nearing the end of their tightening cycle. In addition, speculation that the Riksbank may raise interest rates led to the euro's historic high against the Swedish crown. The Swedish economy itself is expected to feel additional pressure this Thursday, as interest rates in Sweden are expected to be raised by the central bank by 25 basis points to 4%. And with trading volume low because of a Japanese public holiday, the Japanese yen appreciated by a small 0.15% against the US dollar. Most traders believe the Bank of Japan will keep its benchmark interest rate of negative 0.1% unchanged this Friday. Following comments by Governor Kazuo Ueda, markets are keeping a close eye out for any indications of a possible change in the central bank's ultra-loose monetary stance. Traders are paying close attention to reports of potential currency intervention to support the depreciating yen. And the British pound fell by 0.02% to $1.23805 on the currency markets. The financial markets are betting that the Bank of England will raise interest rates by 25 points on Thursday, bringing the new rate to 5.5%. And Bitcoin rose in value by 1.02%, hitting a new 2-week high of $26,806 in the crypto markets. The interest rate hikes expected the Fed meeting would only help push the dollar forward on its bullish momentum. And the Bank of England is also expected to raise its rates, and recent data releases have painted a concerning picture of the UK's economic performance. There has been a noticeable slowdown in economic growth, with July figures showing stagnation compared to the previous year. This slowdown is reflected not only in official statistics but also in business surveys, which are sounding alarm bells. Business surveys are warning that a minor recession might be looming on the horizon. And one of the most significant indicators of economic health, employment data, is already reflecting this weakness. In July, the UK labour market experienced job losses and the unemployment rate saw an increase. Furthermore, a decline in open job vacancies suggests that labour demand is now softening. These trends indicate that the labour market, a key driver of economic growth, is now under stress. The question on many analysts' minds is whether another interest rate hike is the right course of action in this challenging economic environment. A late rate hike could have both positive and negative consequences for the UK economy and, of course, the pound. But on the positive side, a rate hike can help combat rising inflation. The UK, like many other economies, has been grappling with inflationary pressures in recent months. An increase in rates could help curb that inflation by reducing consumer spending and borrowing, and this in turn might stabilise prices and protect the purchasing power of consumers. However, the downside of a late rate hike is the potential to weaken an already fragile economy yet further. Higher interest rates can lead to reduced consumer spending and business investments, which may of course exacerbate the economic slowdown. It could also put pressure on households with variable rate mortgages, potentially leading to higher default rates. So in conclusion, the pound and other currencies like euro and the yen may continue to trade lower against the dollar. The possibility of another late interest rate hike is a topic for discussion, and its consequences for the forex market and the broader economy remain uncertain. As economic data unfolds and central bank decisions are made, market participants will closely monitor the situation to gauge the best decisions they can make on their investments. But let us know your expectations in the comments below. But in the meantime, thanks for watching. This has been the Quick News brought to you by VEVOFX.